The Great Industrial Reset, a comprehensive guide to Honeywell International, HON. As of February 6, 2026, Honeywell International, ticker HON, is no longer the sleepy conglomerate it was a decade ago. It is currently in the midst of a historic corporate transformation. Under the leadership of CEO Vimal Kapur, the company is aggressively shedding its multi-industry skin to become a leaner, high-tech powerhouse focused on three global megatrends: automation, the future of aviation, and energy transition. For an investor today, Honeywell represents a value unlocking story. The company is systematically breaking itself apart to allow its high-growth divisions to trade at higher market valuations. This 1,500-word guide explores the new Honeywell structure, the massive 2026 Aerospace Spin-off, the leap into quantum computing, and the specific risks of investing in an industrial giant during a period of structural upheaval. 1. The 2026 transformation, breaking up the conglomerate. For years, Honeywell was criticized for being too diversified, selling everything from basic chemicals to advanced cockpit displays. In 2026, that era is ending. The strategic splits. Solstice Advanced Materials, completed 2025. Honeywell successfully spun off its specialty chemicals business in late 2025, allowing it to focus on its core physical AI and engineering businesses. The Aerospace Spin-off, targeted Q3 2026. This is the big one. Honeywell has announced that it will spin off its massive Aerospace Technologies division into a standalone, publicly traded company by the second half of 2026. The RemainCo strategy. After the split, the remaining Honeywell will be a pure-play leader in industrial and building automation. By separating these businesses, management believes the market will finally stop discounting the stock and start valuing the individual pieces for their specific growth potential. 2. The new business segments, effective January 1, 2026. To prepare for the spin-off, Honeywell reorganized its reporting structure on January 1, 2026. If you look at their earnings reports today, you will see 4 distinct pillars. Aerospace Technologies, the high flyer. Until the spin-off is complete, this remains the largest and most profitable segment. Honeywell's tech is on virtually every commercial and military aircraft in the world. Key products: jet engines, propulsion, Anthem cloud-connected cockpits, and auxiliary power units, APUs. The 2026 catalyst: defense budgets are at record highs due to global geopolitical tensions, driving double-digit growth in Honeywell's navigation and radar systems. 2. Building automation, BA. This segment focuses on making the world's buildings smart and green. Key products: HVAC controls, fire safety systems, and security sensors. BAI angle. Honeywell is integrating AI into building management to automatically reduce energy consumption by up to 30%, a major selling point for corporations trying to meet net zero carbon goals in 2026. 3. Industrial automation, IA. This is the factory of the future segment. It focuses on sensors and software that allow warehouses and manufacturing plants to run with fewer human workers. The rebound. After a sluggish 2024 in warehouse automation, this segment is surging in 2026 as companies reshore manufacturing to the US and look to robots to solve labor shortages. 4. Process automation and technology, PAT. This division serves the heavy hitters: oil and gas, pharmaceuticals, and chemicals. It provides the operating system for complex industrial plants. 3. The X factor, quantuminium and quantum computing. One of the most exciting reasons to own HON in 2026 is Quantuminium, its majority-owned quantum computing venture. In January 2026, Quantuminium launched Helios, the world's most accurate commercial quantum computer. The IPO catalyst. Honeywell has signaled a potential IPO for Quantuminium in 2027. For current HON shareholders, this represents hidden value. Quantuminium is currently a leader in physical AI, using quantum calculations to discover new materials and drugs. As a standalone public company, it could be worth tens of billions of dollars, providing a massive bonus to Honeywell's balance sheet. 4. Financial health, by the numbers. Honeywell enters 2026 with a robust financial profile, characterized by high margins and a record-breaking backlog. Key statistics, as of February 6, 2026. Market capitalization, some $139 billion. Dividend yield, some 2.5%. Honeywell is a dividend contender, having increased its payout for over 13 consecutive years. Record backlog. The company exited 2025 with an order backlog of $37 billion, providing a massive safety net for revenue through 2027. Segment margins. Management is targeting a segment margin of 22.7% to 23.1% for 2026, reflecting a deep focus on operational excellence and the removal of stranded costs from the recent spin-offs. 5. Critical risks. What to watch out for. No 150-year-old company transforms without some friction. Before you invest, consider these bearish factors. Execution risk of the spin-off. Breaking a $40 billion company in half is expensive and legally complex. If the Aerospace spin-off is delayed past Q3 2026, or if dis-synergy costs are higher than expected, the stock could suffer. Debt levels. To fund its recent acquisitions like the $1.9 billion CASE defense deal, Honeywell's debt-to-equity ratio has climbed to 2.21. While the company generates massive cash flow, high interest rates in 2026 make carrying debt more expensive. Cyclical exposure. Despite its high-tech pivot, Honeywell is still an industrial company. If the global economy enters a sharp recession in late 2026, orders for new jet engines and building HVAC systems could dry up quickly. The conglomerate discount. Until the aerospace spin is finalized, some investors may continue to avoid the stock, preferring to buy pure-play competitors like GE Aerospace or specialized automation firms. 6. Investor strategy. How to trade HON in 2026. In the current market, HON is often viewed as a core and satellite stock. The core play. For conservative investors, HON provides steady dividends and a low beta, meaning it is less volatile than the broader S&P 500. It is a safe way to get exposure to industrial growth. The speculative catalyst. For growth-oriented investors, the 2026 Aerospace spin-off is a classic value unlock. Historically, when high-quality divisions are spun off, like GE's recent split, the two new companies combined often trade for significantly more than the original single company. The AI quantum hedge. If you want exposure to AI but are worried about the high valuations of big tech like NVIDIA, Honeywell offers a way to play physical AI, the application of intelligence to the real physical world of planes and factories. Conclusion. The end of an era, the start of a leader. Honeywell International, HON, is at a historic crossroads. The company you buy today will not be the company you own in 2027. By late 2026, you will likely own shares in two separate market leaders, a pure-play global aerospace giant and a world-class automation and digital transformation firm. The verdict. If you are a patient investor who values dividends but wants a front-row seat to the reorganization of the global industrial economy, HON is a compelling buy in early 2026. It combines the safety of an old-world industrial with the optionality of next-generation quantum technology.